Hey everybody, welcome to Trading Capital's Daily Analysis video. I'm your head market analyst here, Curtis Gunn. Jumping into the charts on this October 26th, what a wild session it was. One of the reasons we started accumulating shorts on this market as well as dumping our longs is because we had a beautiful 3-bar surge. On a technical basis, after you break out from a 3-bar surge, you usually see some significant pullback. And then obviously with earnings shaping up with Meta, Teladoc, Apple still to report, and then with the likes of Google and Microsoft completely, for a lack of a better word, shit in the bed, they have certainly weighed on this market, and it was pretty incredible to see the markets rallying, making a new high, despite Google, a trillion-dollar company, despite Microsoft, a trillion-dollar company, the second largest company, being so down on the day, 8, 9, 10% almost down on the day. But overall, this is a nasty reversal signal on the S&P 500. You can see you hit resistance here. This downsloping trend line, originally it looked like you were breaking out and off to the races. This is why it's so important to wait for that technical confirmation to the upside, which we never got. If we take a look at the intraday action, what a wild session. We were up and then we were down. The positive for the market is that we did not take out the lows in the pre-market session. You did pretty much give up all of the gains that the market saw, but nonetheless you are still holding this wide range green bar over here, but you're teetering on a knife edge. And I do think just with the fact that Meta is getting crushed in the after hours, that is certainly going to weigh heavily on this markets. I mean, we're talking about another 11% down on Meta when it was down on the day already 5.59%. So if we actually look at that swing, Meta had today an 18.5% swing, which is pretty crazy, I might add. Now, we're long Meta. One of the reasons I'm long Meta is we're hitting massive technical support in an oversold condition. We actually have to scroll back all the way on the chart to these major pivots in 2016, some chop in 2015 as well. So one of the reasons why I wanted to accumulate some Meta here is because I do think it's completely oversold. You did hit a technical gap fill. This is a major retrace zone before you had a breakout in 2017, which arguably led to Meta's largest run in stock market history. So again, massive technical support levels. We're just starting an accumulation position here. Only 1% of our portfolio, so I have no problem adding more. But these are the levels that you want to take shots at when you're hitting multi-year supports. And it's not like Meta hasn't been demolished already. I mean, this stock is down, trading from 385 all the way down to whatever we're at now, 114, just sub 115. So I think Meta's valuation now pretty much being below a 10 PE, forward PE, is certainly more of a value play at this point in time, despite its still potential to be a growth stock. I think everyone's just throwing the baby out with the bathwater because Meta has disappointed now basically on 1, 2, 3, 4 earnings reports, and I think you're starting to see some of that capitulation in the Meta stock. So let's just continue to accumulate Meta as it continues lower. We're also getting some weakness from Wolfspeed, another semiconductor play that is getting hit over here. TDOC is actually pretty strong on the day. It has popped up. It was up to here around 31.86. I tried getting my short level, but I did not get filled. So you're still up about 7.55%. Another big winner is this Now stock. I'm waiting to short this at this 417.73. So we'll just have to keep an eye as things progress. I am going to put an alert there, but that is the level to short on that stock. Let's just jump back to the SPY, shall we? So arguably the SPY has put in this reversal signal. I do think it's going to be tough for the markets to see some upside tomorrow, just due to the fact that how much Meta has fallen. Now you are kind of being countered by that ServiceNow stock a little bit, but it really weighs when you have Facebook down, Microsoft down, Google down. Let's just take a look at these charts. Google down, boom. What did Google fall today at the lows? 9.63%, actually making a new yearly low. We are starting to accumulate Google as well. One of the reasons why is you have this beautiful technical gap fill in an oversold condition, making a new low on the year. I still think these markets could potentially see some upside. It's really going to hinge on Apple. And then if you take a look at Microsoft I'm actually more bearish on. But let me just erase some of these drawings here. Microsoft, you don't see Microsoft down 7.72% often. But now the big thing is that you're still holding this reversal low. That's going to be your big level. But before I am willing to pick up some Microsoft, I may play this double bottom low if Microsoft continues to sell lower. But again, when you take a look at these stocks, and they have been decimated today, falling 7%. It was surprising to see the markets not down more just with these multi-trillion-dollar market caps. I mean, if you look at the QQQ, nasty damage done on the Qs over here. You can see you had this beautiful 3-bar surge once again. You actually did confirm a breakout on a technical basis, and now it looks to be that you're reversing that breakout. The big question is this going to be a failed breakout? Because if it is a failed breakout, you'd likely go back to the lows here around 255 to test that double bottom. Now, the interesting thing about the Qs is this head and shoulders pattern did not play out. You just missed this level down at 251. So in reality, the downside potential still remains and still looms overhead with this topping formation in play. So let's just be wary around that. Apple is certainly going to be an interesting earnings. I believe it is tomorrow. We have a whole bunch of other names as well reporting. So there's lots to continue to see as the volatility is ever so increasing in this market as well. Another stock I want to show you is Boeing. We just picked up Boeing today, but Boeing got decimated. I mean, if we simply look at Boeing had this nasty capitulation candle. This type of volume on Boeing, we haven't really seen this type of volume since April of 2022 when Boeing had this nasty May sell-off over here. So I think Boeing can get a little bit of a mean reversion bounce. It obviously came on news. I never like to see a news headline like the banning of one or the non-approval of one of their Boeing, I think it was their 747 planes. In my opinion, when you see a news headline like that, that type of news-based event generally doesn't stay and remain as long. And I think that's certainly going to see a pretty big bounce just due to the fact that when you trade off of news headlines, like getting spooked out of a stock, Boeing was actually making a beautiful charge. It looked to be closing above that 50-day moving average. And I think there's people that want to accumulate Boeing for the long term since it has been completely depressed. You're still holding this little bit of a double bottom, higher low. So it'll be interesting to see if Boeing can hold this low and continue to grind higher. And again, generally from my experience trading around news, now there's different types of news, but a news headline like this, where it's a non-approval of a plane, it could be reversed in a week or two, and I certainly think there's a good shot of that. Let's take a look at oil. The WTI had a pretty powerful day today on the back of yields and the dollar collapsing. Obviously, commodities saw some strength today on the back of the dollar weakness. So oil was up a whopping 3.66%. Now you're still trading in and amongst this resistance range. You haven't really broken out. You're still kind of in no man's land. Natural gas was down substantially on the day, but reversed. That is healthy price action to see. Now this just seems to be, looks like consolidation, potential consolidation to still potentially attack this gap fill. But we took profits on our boil trade, so at this point in time, I really don't have any trade setups right now. Let's take a look at gold, G-O-L-D. Gold had a pretty strong day. It did pull off from the highs over here, but nonetheless, gold is still consolidating in this little bit of a tight bull flag range, potentially making a move up. It was a little disappointing that gold didn't rally up a little bit more because you can see the massive down pressure in the DXY. Now the DXY has pierced that 50-day moving average. You really haven't pierced and closed and confirmed below that level since you started this massive bull trend up. Actually, this was your first time that you closed and confirmed below the 50-day moving average, and then that was pretty much off to the races for the dollar. So I naturally expect a potential bounce and a retrace back to this 110.75. Then that will be the big question for the dollar. Can it recapture that 50? If it doesn't recapture it, then we likely see more downside in the dollar. But if it does recapture that, then I do think we can retrace back up to this basically somewhere in and along this downsloping and upsloping trend line. Perhaps this 112.86 will be a big level of resistance as the two levels confluence and intersect there. Let me just flip back to this now chart to see we are getting close to a short, so let me just keep that up on the radar. Bear with me while I type in that symbol. So we are going to short now around 417. So I am going to pick up that. I'm just entering it in as we speak. But let me just take a look at silver. Silver miners are starting to pick up. Silver's again consolidating. It looks to be that you're on the verge of breaking out and seeing a little bit more upside to silver. If we break out past this pivot high around 1968, I think you'll have a sharp move to this 2050 area, and then before challenging this multi-week consolidation level around this 2150 area. So that's kind of your levels for silver. It is good to see that the mining plays were strong even in a weak market. So you had the GDX, still up on the day 2.95%. That still has technically broken out of this downsloping trend line. The fact that you had a powerful move here, you stopped at resistance, sold off, retraced back to that breakout zone. I do think you're going to blast through this resistance point and likely head to this 2733. If we take a look at POS, Pan American Silver, sorry, this chart is a bit messy, but Pan American Silver was also positive on the day, up about 3.31%, even in a falling market. So we're starting to see the metals and the miners start to lead the overall indices higher. Let's take a look at the US 2-year yield, because that's going to be pretty important to where the federal fund rate has to still get to. So obviously with the 2-year yield, you did see some more downside today. But nonetheless, the 2-year yield is making this bearish consolidation inside of this range. You can see it's had 1, 2, 3 days of consolidation now, and it is on the verge of breaking lower. I have major support at this bottom of this wide range red or green bar. That is going to be your big level. I do think that if we get a straight shot in the 2-year yield into that level, you'll probably see somewhat of a bounce, potentially bouncing something like this, boom, and then retracing back to this channel where you broke down, and then eventually making lower lows. So that's kind of the expectations for yields. Now we have to be really careful with yields. If the Fed is pivoting, again, we could see that melt up, but earnings are kind of hindering the fact that the melt up is happening. So if earnings continue to be weak, then that melt up scenario is very, very unlikely, even as the market fundamentals from the US dollar softening and yield softening are in favor of the market. Now, if Apple comes out with strong earnings, it could lift the markets on the simple fact that yields have softened, the dollar has softened, and then strong earnings, of course. But with Meta down, Amazon or Google down, Microsoft down, those are three big names that are weighing heavily on this market. So let's just continue to trade wisely and not over position ourselves in any specific stock. Oh, I guess our now basically just missed that level and is pulling off substantially. Let's take a look at the US 10-year yield. Actually, let me just first discuss this 2-year a bit more. So with the 2-year yield pulling back, it's now implying that the bond market is implying the Fed is going to be less hawkish. And what we saw today with the Bank of Canada, the Bank of Canada consensus was a raise of interest rates by 0.75%, and they came out and surprised the market with a rate hike of 0.5%. Now, I think that's why yields have been falling so sharply, is because the bond market is now sensing the Fed is going to be less hawkish, and they're potentially also only going to be doing a 0.5% hike at that November 1st meeting, and then potentially tapering from that point. Now, if they start to taper, it means that we're likely going into a recession. So in terms of valuations being priced in for a recession, we have not seen that yet. So there's still a strong probability that many stocks head lower if we do go into a deep global recession. And typically we do get a signal from the bond market when interest rates start breaking key levels. I'm going to be very, very concerned for a potential black market swan event in the stock market. If yields fall sharply, that's typically short-term bullish for stocks, but if they fall, it all matters on the rate of change movement in yields. So if the rate of change movement starts increasing at an exponential rate, then that is going to certainly indicate a potential black swan market event. And a big level I'm watching on yields is basically this trend line connecting your pivot in March, another major pivot in August, and then you're basically coming up to this orange trend line here. So you're very, very close to potentially testing and breaking that level, but we'll just have to wait and see how that progresses. So again, congrats on the trades that we did do. We've been accumulating many shorts on Tesla, Apple, Merck. Let me just show you Merck. Merck put in this beautiful, beautiful monthly pattern over here. We did a chart on it, and the fact that you've been trading in this wedge pattern now since the 2007 high, 2009 low. You connected here in 2020 at your pre-COVID high, and look at that level. You're hitting that level again. This is major, major long-term resistance. You do not break a multi-year trend line at the very first attempt. And this is the monthly chart, so this shows that there's massive resistance there. And then when we flip to the daily, we got a beautiful little bit of a topping tail signal. You did reverse off the highs and closed inside yesterday's wick high candle. So I do think we're going to see a pullback in Merck. It is extremely extended. That being said, it is certainly in a bullish uptrend, but I do think we're well positioned now shorting at the highs to capitalize on a potential pullback. And when you look at this pattern, upsloping wedge patterns have a very high degree of breaking lower to the downside, especially when it is at the all-time high. So just a little bit of educational tidbit there. Let me just see what else we did. We shorted IBM today. IBM had a beautiful retrace connecting your pivot to your basically your pivot chop over here. Look at that retrace. You retrace basically most of this down move. There is a potential that you can come up to this 138 level and fill this gap, but you're also on an extended gap up, 1, 2, 3, 4, 5 bar, 6 bar surge to the upside, plus an impeccable move off of this low. I think IBM will see some consolidation at the very minimum. We're also picked up a bit of Starbucks short. We added that yesterday. It's pretty healthy to see that we added to our Starbucks short. This type of reversal where it looks like you're going to negate the head and shoulders topping formation here, and then you basically reverse and gave up most of those gains and closed right back below those line. That just solidifies it to me that this stock wants to head much, much lower. And in terms of the level that I see the stock heading to, I see Starbucks dropping to the 75 level. That is the downside target of this topping formation that is in play. And again, when you see a type of reversal from the high down onto the low, closing back below this key resistance trend line, that is a beautiful, beautiful signal for us to be on the short side of Starbucks. Just want to see if there's anything else I can pull up on the charts. We did severely add to our end phase short today. This stock was trading at 180, 190, 200 PE, at these lofty levels. So again, we continued to day trade this one. We made an excellent score. We added to our swing trade, brought our average significantly higher, sitting at 295. You can see we day traded this one beautifully at the 302, netted a beautiful over $5 gain per share on the day trade, so that was excellent. And we also brought up our average on the swing trade, sitting at now 295. Enphase is one that is valuation is crazy, crazy extreme. Even though it had positive earnings, trading at a 180 or 200 PE in a bear market does not last. I don't think there's ever a case, unless you've cured cancer as a company, where your stock will continue to trade with a PE of that magnitude, even if you're revolutionizing. And let's just be clear, in a recession, this PE will likely get sliced in half. I still think Enphase has to go down to fill some key gaps down here, also down here, and I just think it's going to be one of those rude awakening stocks. There's always, in bear markets, it's really wild and weird. There's always leading sectors, like in '08 it was the energy. There is obviously energy this sector, or this year as well, is also a leading sector, but always the leading sectors hold on till the very end, and then they play catch up in the bear market. Just like energy typically tops like 6 to 8 months after the tech industry, but it beats the tech to the bottom in a bear market. That just shows you the sheer power that these stocks can potentially fall. And I think the solar clean energy is going to be one of those leading sectors. It's been so hyped up by big government, and retail traders have been hopping on board, and I do think we're going to see a massive capitulation in these solar stocks and clean energy stocks in the near term, just because so many people are bullish and bullish and bullish. But when the valuations don't make sense in a bear market, you kind of just have to use your logical brain and basically short it. That's all we can do at this point in time. I'm just going to scroll through to see if there's anything else that we did today. We did buy a little bit of Google again. We day traded Google. We shorted IBM. We also shorted Costco and Coke. Let me just pull up this Coca-Cola stock. So this was pretty much a beautiful technical setup. Coca-Cola has this long-term daily, it is even potentially a weekly head and shoulders pattern that you can have a left shoulder, a head, or right shoulder. It did trigger. You have not fulfilled the downside target here of around 49.89, call it 50 bucks. And the beautiful thing about Coke is you've had a 3 weekly bar surge right back to the retrace of the neckline. And if I flip back to this daily chart, this doesn't get more technical than this. When you get a retrace back to the neckline and it gets rejected, it just solidifies the probabilities that this pattern is likely going to fulfill its downside target. Now, Coke is a very, very safe blue chip company, but with a slowing global economic conditions, you will see more downside. And when the charts are telling me that you get this clinical breakdown confirmed on a weekly basis, and then you get a beautiful surging move right into the top of this channel, and it's rejected to a penny, that just makes me very, very excited as a technical trader. We also shorted Costco. Costco has been a powerhouse. You can see Costco is trading in a little bit of this range, and it looks to be putting in another topping formation. Here you have a left shoulder, a head. Let me just erase some of these things here just so it's clear. So you had this mini head and shoulders pattern that broke down. We shorted that, covered our short, got out. And now you look to be performing in another left shoulder, another head, and then this could be a right shoulder. So typically what happens is you do get a retrace back to the neckline, which would be this red line over here. You can see we almost hit it today, but just shy. But one of the reasons I wanted to short is because we had this beautiful symmetrical channel connecting your left shoulder pivot to your right shoulder pivot, to your left shoulder pivot low, to your right shoulder pivot low. And that was enough on an extension move for me to pull the trigger on an initial short position. I have no problem accumulating more of a short trade if Costco shapes up this way, because it is looking to be putting in, once again, a beautiful topping, potential topping formation. And if we break this, I mean, you're talking about a 563 down to 4. That's a 130 point move. So call it, 500 to 400 to 370 would be the downside target on Costco. And look at that. It just so happens to take you down to this massive consolidation zone over here. Your pivot in 2020, your consolidation before breaking up. So that just really is signaling and screaming massive downside. When you start seeing these blue chip companies, the likes of Microsoft, Google, Facebook, Costco, putting in these potential topping formations that could be very, very deadly and detrimental to the market, you should be on watch. You should be on notice. But again, Costco trading above 500, its PE was trading like a growth stock despite it really being a value play. So again, when everyone is crowding into these safe haven consumer staples, you generally want to take the opposite trade, because history is not kind to those that pile in and chase the so-called safe stocks higher as everyone is piling in. Let's just take a quick look at Meta. So Meta is continuing to fall. I mean, what a decimation on Meta. We're talking about trading at this now. This is another secondary gap fill level. I will add it if we go down to 108, but at this point I'm still holding our accumulation, our first level right now. But again, there's lots of negative signals I'm seeing across this market. It could be a very, very rough end to the new year if stocks continue to poo or shit the bed on earnings. And Apple is going to be a big earnings play next week. Let's just check back on Teladoc to see how that is. So Teladoc's holding its gains, which is surprising. Let's check back on Now. Now is holding. Wolfspeed's still down. But again, we don't want to get cute with these markets. Things will continue to head lower if earnings are continue to weaken. Let's take a look at Tesla, TSLA, because that one also saw a little bit of a reversal. Now, Tesla is still fighting this massive weekly pattern. So you still have this weekly head and shoulders pattern. Right now you are negating it, but there's still 2 days left in the stock. If Tesla closes back below this orange line, these markets are in severe trouble. But just to see the type of reversal in Tesla, you know, this wide range red bar getting rejected off of this level, that is super healthy for our short position, but it is super bearish for the overall market. The fact that Tesla is still trading inside of this wide range red bar and can't seem to get out of its way, that's going to be the big level to beat. These two wide range red bars seem to be keeping Tesla in check. And believe it or not, I believe this was the final sell candle where Elon Musk sold, needing to raise a few more extra billion in stock before purchasing the Twitter that looks to be going through. So we're going to take a little bit of a loss on that Twitter trade. But again, you never know. Things could be going the sideways. To me, all this hype around Twitter, basically with this deal, it still has not acted the way a buyout stock typically acts. I mean, usually you would see it at that 54.20 level and just trading sideways. To me, this type of volatility in this Twitter buyout deal is screaming that maybe it doesn't get executed at 54.20, maybe it's lower, but who knows? I'm just speculating at this point in time, but it is likely that it does go through right now. So overall, my analysis for the S&P 500, we're likely going to see a down day tomorrow, even though in the after hours we're slightly up. I still think Meta is going to weigh on this market. You'll have initial bit of support retracing back to this breakout zone, which you never really confirmed. If you lose that support, then I do think we go fill this technical gap. And remember, we still have this massive gap. This little tail candle never happened. This is still your fake print. So that would imply that the SPY could fall another, to fill that gap, 6.2%. That is a big amount down on the S&P 500 if it were to come down and fill this gap, which I think is very likely. So let's just flip to the daily just to show you that big gap. So you can see that massive gap on the chart. I believe that still needs to be filled to the downside in order for the markets to go up. So sorry for this video, it's a bit longer than usual, but there's so much to cover. Again, great job on the profits today. I think we're well positioned to continue to grow our accounts, and let's continue to trade this market appropriately. Please give this video a big like down below.